Right. Sarabjit Kour, Nangra, VP Research at Angel Broking is now joining us. Sarabjit, first a view on Infosys. After the recent comments that came in from the Infosys management at some of the conferences, there has been a decline. But at the same time, they have not changed their guidance. That's what the clarification that they have given.
Yeah.
Would you buy in this decline as far as Infosys is concerned?
Yeah, we believe that this decline should be used to buy because, see, if you look at the commentary, obviously there are certain trends in a commentary. Whenever a commentary is given, even in during when the results are out, it's similar to that lines. Majority of the things were similar in that. The guidance they have maintained, so the guidance is similar. They have maintained that they're mining clients effectively. What they have said more in detail is that some verticals are facing some issues like retail, healthcare. So those might see some slow order inflows coming in. So that was more light was given to that effect. But still, they believe that they are over there aligning to clienteles which are doing better than that industry growth. So they will be able to restrict the damage that could happen because of that. Secondly, so that should be noted. I'm not denying that should be just discounted at the face value. But yeah, if the trend continues for long, then probably FY18 numbers could be impacted. But as of now, because of that, we are not changing our numbers. Secondly, they are very confident that the new strategy that they have to mine clients, which can lead to increased productivity and hence maintenance of margin and ROE, I think will play off. And because they are very clear in that front that industry trend is more towards slowing IT spends happening, industry getting commodity in nature, and hence they have to mine clients which are more in terms of value addition or bigger clients where the productivity, even though price dips happen, in case they happen, in case the macro environment remains volatile and doesn't achieve stability, then in that case volumes take care of the price dip, which we have seen in last couple of quarters. Large company like TCS and Infosys have delivered good volume growth. So to that extent, I didn't find anything different in the commentary. And then Q1 guidance was given, which was like margins will be impacted, and which I believe is a normal trend. So there was nothing very extraordinary except that retail and healthcare is facing some challenges, and but they're confident that they will be able to overcome, given that the clienteles they have in that segments. So I guess overall, I don't think there is very red flag to be raised, and companies like TCS and Infosys are gearing up to, they are aware that this industry is getting commodity in nature, because the services have become more generic. The top players, Indian players, have more than 50-60% market share in the IT outsourcing industry. So the market share gain still is available, but the growth to that extent, which was there earlier, will slowly moderate, and IT spend as it is internationally is showing moderate signs. Either it remains flat or it grows marginally by 2 to 3%, mainly in line with GDP. So it's not outperforming the GDP growth also. To that extent, Indian companies will have to mine more clients. Offshoring as a business is not going out of a trend because of unless a major policy issue happen in US. And these companies are now grown up enough, to withstand or to capitalize. These companies have shown. We have seen so many phases of IT. There was K2 happened. Then there were many other trends which have come and gone, where the industry felt there is a leg for them to move up in the value chain. Now which is the case is the digitalization. So TCS and many other companies are taking initiatives to grab a pie there. So I think these trends happen in the industry. There's nothing to get worried about it. And given that these large companies are well aware of it and are ready to optimize and minimize the risk as well as optimize the opportunity, I guess it's a good time for investors to use such sentimental impact on stocks to get into stocks actually.
After the recent correction, how would Infosys be trading? Is it trading at a better valuation because EPS is not cut and overall it's now looking better than what it was?
Yeah, I mean, in terms of valuation, currently our target price on the stock is 1378. So that kind of an upside is available on the stock after the fall. Earlier it was accumulated after the 10% kind of a rise, after stupendous rise, the stock I think has corrected almost, 7, 8 to 10%. So that gives a buffer to the long-term investors to actually encash that dip actually.
The management also mentioned that earnings can be volatile going ahead. Are you worried about that? Because generally a company like Infosys, earnings have not been volatile.
In terms of quarter on quarter, things change in terms of margin profile, in terms of those things happen on which is a quarterly trend. But companies like TCS and Infosys were exhibited that they are moving out of this trend, at least on the top line front. Earlier Q4 used to be a very subdued quarter in terms of volume also, but now because of larger clients and bigger deal values, these companies are able to deliver even Q4 decently. So I'm not so worried about the volatility part actually.
Right. How would you look at something like a Tech Mahindra, which has done exceptionally well after the results? Do you think that it's just playing a catch-up role to this, some of these valuation gap that was there?
Yeah, actually, because earlier I remember 1 or 2 quarters back it was really punished badly. Now it's from a buy, it's come to accumulate for us actually. So to that extent, the other stock has done quite a decent catch up. Tech Mahindra again, it's in comparison to Infosys and TCS has been using various tools to diversify its business because it's highly concentrated on communication. So it's trying to get into the big league by diversifying its business through the domain one, for which it's using acquisition, which they have been doing prudently, so which is a very good point. So, but those acquisitions take toll and take time to get profitable before they. So, in the near term, the growth might be on the top line might look decent, but bottom line doesn't reflect the same profitability that it should. But I think long term, like they did with Satyam, probably those acquisitions will also turn around. So yeah, but the stock for the near term has done its bit. So I guess the upsides would be there, not more than 7 to 8%. I guess so.
Right. Dr. Reddy's did an acquisition. They bought about 8 ANDAs from Teva for about $350 million. Do you think that's broadly, as of now, nothing that would lead to a change in the EPS?
There will be marginal improvement in the EPS. I don't know about the profitability of these ANDAs, but these ANDAs are supposed to be niche and complex products. So I guess it will have decent sales turnover of easily of around $100 million upwards. So I guess it will lead to an upgrade of around say 7 to 8% probably on the EPS on a very conservative basis. 3 to 4% on the EPS front. So I guess it's a decent acquisition done at decent valuation. It's not expensive at all. Done at EV to sales of around 2 times, which implies the profitability. Even if I take debt to equity of 1, around 17-18%, which given that these products are complex, should be the company should be easily be able to justify. So very decent acquisition. Given the current scenario also where Dr. Reddy is faced with US, regulation wherein currently there is no possibility of these events impacting the numbers, but it will augment the growth for Dr. Reddy in the near term.
Right. Overall, out of these 8 drugs, 7 are yet to receive approval and they are complex in nature. So, you would want to see the performance before we see a meaningful change coming in.
Yeah, that's what I said. These are good products, and though details are not available, I said if they have to be commercialized, they can be incrementally very positive for the company. And probably normally an A&D approval, depending upon how complex it, normally takes 12 to 18 months. So probably FY18 onwards is possible good times where these ANDAs could start reflecting. So.
Right. The recent fall in names like Sun Pharma, Lupin, or the underperformance that we are seeing over there, is that a buying opportunity? Are their valuations now looking better, or even the growth outlook has changed?
No, we were concerned when these Lupin especially was touching new highs earlier during the earlier part of the year, and now it's meaningfully corrected actually to adjust to the reality that See, pharma companies, one thing over the years I've experienced is that there are periods when they do exceptionally well and there are periods when they exceptionally underperform. And the reason being that now US is a major part of their portfolio. They have huge pipelines, market share in the US generic market. And so are the risk associated. So you have US FDA coming in, you have approval slowdowns happening. So, and especially for Lupin, there were other concerns like Japan currency problems. Then they faced that was major because after US, major is Japan. So, and they had slow approval in US, and then they had 483 which got clear. So those events pan out and they have impact on numbers for a year or for a few quarters. Now, in case of Sun Pharma, that's reflecting for more than a year. For Lupin also, last year gone by has been impacted. So the valuations have adjusted. So prudent strategy is to never buy these, even though they are defensive, the earnings will bounce back, the earnings momentum, profitability will bounce back. But the prudent thing is to get them at lower band of the valuations and sell them when they reach on the towards a higher level of profitability. So in that sense, yeah, these are good businesses, and after the correction, both are actually good buys in the sector.
Right, Sarabjit, thank you so much for joining us here this afternoon. Hope to see you again quite soon. On that note, we're taking a break. Coming back in 2 minutes, we'll focus on what's happening with Tata Motors.